with IG Markets. Stan Shamu is joining us to give us a look at what we can expect. Good morning to you, Stan. Just talking about currencies, the US dollar continuing to edge higher as yields rise. So how long will this sort of boost that we're seeing for the US dollar likely last? I've been reading lots of analysts that said that, it's going to be quite choppy trade for the US dollar going forward.
Yeah, well, choppy at best, I suppose, but I think the general trend at the moment will probably be a continuing of gains in the US dollar. Of course, we continue to see the US Treasury yields push higher. I think they printed at 3-month high overnight. And of course, it's that winding back of asset purchases that's really driving the move. I think the biggest assets to look out for potentially will be gold as well, which is continuing to fall. I think it dropped back below that $1,200 an ounce mark, and it really does look like it might be headed back towards those June lows. I think it was about 1181 where it bottomed out in June and really started that massive recovery, which took it back above that 1400 mark for a short while before it resumed that downtrend. So I think in the short term we'll continue to watch out for that June low as it currently hangs around that 1192 level. So if it manages to defend that level, then potentially we could see a bit of a bounce, but essentially gold's almost erased that whole gain from the time it bottomed out in June. So it's a tough day for gold, but I think for the US dollar it's going to be positive, and this will be cheered by a couple of central banks, particularly the RBA and the BOJ.
Yeah, and the BOJ is meeting, and it's looking to cut, so quite a different story happening in Japan. And what do you think that this is all going to mean, for the yen?
Yeah, I think it's been pretty convenient for the BOJ to have its meeting after we've heard from the Fed. So I think this really does make life a little bit easier for them, because ultimately they're always looking to outdove the Fed just so that they can keep this yen weaker than the US dollar. And of course, this ultimately helps Japanese equities continue to drift higher. But I think today's meeting, because of what we've heard from the Fed, probably won't yield much at all. They'll be just happy to see the dollar yen maintaining its gains above that 104 mark. Potentially they will drop that word deflation out of their statement today. Of course, they've been plagued by deflation for a very long time, and now they're looking to really return to a good phase of higher prices or inflation, and of course target that 2% over the next year and a half or so. So that should remain intact. They will obviously feel that the Fed's dialing back of asset purchases is a positive for them, and potentially this means they don't have to do too much now. I think a lot of analysts were thinking if the Fed doesn't taper, then the BOJ might have had to make some comments pertaining to further stimulus potentially at the beginning of next year to counter that sales tax hike. But this makes it a bit more interesting. They're probably just patting each other on the back at the moment, just saying, look, the dollar yen's at the highest level since October 2008, and we don't really have to do much at the moment.
Yeah, it's so interesting how it's all playing out. Tokyo shares closing at a fresh 6-year high yesterday. Could we see that kind of rally continue in Japan, given what happened in the US? And I guess how then might that influence our market through the day?
Yeah, I think today it's actually looking like the Nikkei will pull back at the open. We're calling it down about 0.4%. Of course, it's been the leader in the region for most of the week, and that was also ahead of the Fed and the BOJ. So I think the fact that it's pulled back now just generally suggests that a lot of investors now thinking that the BOJ won't actually say anything significant today because the Fed has already done the hard work for them. So this is resulting in a bit of profit taking in the Nikkei at the open. But look, potentially if the BOJ uses this opportunity to continue to push the dollar yen higher, then we could then see some buying come back into the Nikkei through the session, and this would be positive for the rest of the region as well.
As far as the local market goes, are we going to be on struggle street today because of the impact that this taper decision washing through the market has had on commodities in particular? Not only gold, but also some of the, the copper and the likes.
Yeah, I think it's a tricky open for the Australian market, but we're currently calling it up about 0.5%. So this should see it extend its gains to about 5,230 at the open. Of course, it does remain very choppy because we've got the commodities space looking a bit weaker, particularly for gold. I think iron ore was down for a seventh straight session. But there are some positives. I think the recent spike in interbank rates in China has prompted the PBOC to come back into action. I think yesterday they ended up injecting around 32 billion into the money markets. Of course, then the main thing at the moment is their reforms are seeing them want to liberalize money markets, and they're just taking the first steps, trying to see how the interbank rates respond to a lack of action from the PBOC. But the fact that they acted yesterday might actually end up being a positive, and it might see China recover quite well today, and ultimately this might be positive for our market as well. But the weakness in the Aussie dollar is also a bit of a positive for some of the local equities. So I think following the recent weakness in the Aussie market, there's a lot of bargain hunting taking place. I mean, compared to the US markets, for example, which are still quite close to their record highs, we're still quite far off. So I think a lot of investors locally will be encouraged to buy some shares at the moment at these levels. So we should probably see the local market do fairly well today.
I know, but does that mean that we'll see this Santa Claus rally continuing as we head to next week, or do you think that there's going to be a lot of people just welcoming sitting on the sidelines?
Well, having low liquidity or low volume in the market can have its advantages, and in this case, if the market starts pushing higher in low volume, then it could just continue to run, to be honest. But of course, there's not too much going on at the moment on the company news front. It's getting very quiet, so it's all about whether or not the bottom-up strategies in the market are starting to wane, or whether or not everyone's just looking at it from a top-down perspective and thinking it's time to buy equities because they are currently trading at lower levels after this sharp pullback we've seen back towards that 5,000 mark. So I think there should be a bit of room for the market to move higher in the short term.
Okay, we look forward to it. Stan, thanks for joining us this morning. We'll chat with you later on.
Cheers, Nadine.
Stan Shamu joining us from IG in Melbourne. Well, in the past 15 minutes or so, some news that Treasurer Joe Hockey has appointed 4 members to serve on the panel of the Financial System Inquiry. Craig Dunn, soon to be former AMP CEO when he steps down in the new